Hey, good afternoon. This is Sarah Collins with the Office of Employee Engagement and Wellbeing. And we're so glad to sponsor these series of talks with the Harvard University Employee Credit Union. This is our first we have 6 additional for the next 2 weeks. And your presenters today with HUECU is Sarah and Magdalia, I'm sorry. So I'll turn it over to them now. Thank you.
Thank you, Sarah. Again, this is Sarah Scruggs from the Harvard University Employees Credit Union. I am the Community Engagement Specialist with HUECU, and then Migdalia Gomez, as well as on and will do the second half of the presentation. She's our Community Engagement Manager, and we're glad that you're here. We're going to get started with just a couple of housekeeping tips. We have already gone ahead and muted everyone on the call so that way you can hear the presenters clearly, and that can be the thing to focus on. We also want to make sure that you know how to use the questions or chat feature. So if you could, while I'm going over these next couple of points, just type in and let us know where you're joining us from. That'd be wonderful. So that way I know, number one, that you can hear me, and number two, I know that you know how to ask questions throughout the presentation, because we love to answer your questions, and all money is personal. So if there are questions that you have, we'd love to be able to answer those. So if you could find the chat feature or the questions box and type in just where you're joining us from today, that'd be wonderful. And as a question that we get a lot, we will make this presentation available to you all through email. We will send that email tomorrow, so be on the lookout for that. And we will include the slides as well as a link to a survey so that you can let us know what went well today and what are some things that we can continue to work on to make these presentations great throughout these next couple of weeks as we continue on in the series. So Harvard University Employees Credit Union, or HUECU, is a not-for-profit financial institution. So we really put the community first when we're doing everything, which includes doing all of these types of community activities like personal finance education. And so if you have questions about HUECU or about becoming a member, please don't hesitate to let us know. We'd be happy to tell you more about that and get you that link to join. Again, like Sarah Collins said, we do have a full series of workshops with Brigham and Women's Hospital, and you can go to huecu.org/BWH. It's in the chat panel now to see the rest of the series. We're really excited about this series, and hopefully there's more to come. So to really dig into our topic for the rest of today, we want to talk about reducing and deferring expenses. When we're thinking about increasing our cash flow, really the first thing that we need to do is actually think about how much cash flow we have. And so the first step is either reviewing or creating a budget for yourself. If you've never had a budget before, this is a really great time to sit down and really put into perspective how much money is coming in and how much money is leaving. So what's my income? What are my expenses? And these budgets can be as complicated as you'd like them to be and as detailed, or they can be as simple and as few details as you'd like them to be. Really what the goal is that you're able to see what money you do have after you've paid all of your bills and done everything that you've needed to do. So when you create a budget, we do have a handout that you can use. It's available online, but you don't have to use this. Personally, for myself, I use an Excel spreadsheet. Very simple, very to the point, because that's the only type of budget that I know I'll actually go back to. And I'm someone who works with finances quite often. And so for me, that keeping it simple is really important for me to be able to revisit it and want to kind of see everything that I'm spending and feel more at ease with my finances. Maybe you're stuck a little bit more about how to even start with a budget, a great place to start is with your budgeting tool through your financial institution. If you're a member of HUECU, we do have a budgeting tool, and I can confirm that. With a lot of banks and credit unions, they do have these budgeting tools as well, already built in so that when you use your debit card or your credit card, they get those purchases and automatically categorize them for you. So I encourage you to look into your online banking portal, wherever your financial institution is, and see if they have a budgeting tool for you to use. A lot of times these do take some time to set up on the front end, so you do have to know the categories, things of that nature, but they will save you time in the long run because they categorize all your expenses for you once you've done that work at the beginning. And now we're getting to the part of reviewing those expenses. You've set up your budget, you have it all worked out, you see what you're spending, you see your income. So now we want to minimize our expenses. So not even just during this time, but during all times, I recommend looking through these things and reevaluating this. And the first being the needs versus wants. There are definitely some needs that are for some people that aren't needs for other people, and vice versa. So at times, this can be a really big question. A lot of people always say oh, if you just wouldn't buy your coffee, then you'd have enough money to buy a house. Well, no, that's probably not true. But what it is really taking a look personally within your family and seeing what are those needs versus the wants. And these are different for every person. Especially during this time, something we wanted to point out for people who are on the front lines like you all are, and we're so thankful for that. There are companies and businesses that are giving away things for healthcare workers during this time. And it is a small show of appreciation for what you all are doing. So please take advantage of those resources. I know we use we go to Be Good all the time, where our office is, and we make sure that everybody downloads their app because they send the best coupons. And I know right now they have 50% off for healthcare workers to get a meal. So if you haven't used that coupon, then that could be one that you could use. Definitely look out for those during this time because you deserve that and 1,000 times more. And then as well as refinancing on your loans. Magdalia will go into this more in depth in the second portion of our presentation, so I won't speak much to this, but it is a good option if you are needing to minimize your expenses right now. And we can also make sure that we're not spending as much money right now if we defer expenses. The difference between minimizing expenses and deferring expenses is that when you defer an expense, you're still going to be paying it, just not right now. So I always tell people, make sure you know that you're still going to be spending this money, you're just not spending it today or this month. So the first thing is with federal student loans. If you hold a federal student loan, all payments should have been stopped beginning in April, I believe, maybe March, and lasting until September 2020. And this was due to the pandemic, making sure that people had access to funds. So your student loans have probably stopped. And the interest rate for these loans also has dropped to 0%. So you will not be paying, interest is not accruing on these loans right now. If you're still able to pay your student loans during this time, I highly recommend it. You're able to pay down on that principal, which is really wonderful. So I recommend if you can continue to pay your federal student loans, continue to do that. If you're not able to, know that the federal government has stopped all those payments and you shouldn't be charged for any during the pandemic. Skip a pay option is very popular because it's a great service that people are providing during this time. A lot of financial institutions have changed some of the requirements for their skip a pay option, whether that be they're letting you skip more than one payment, or maybe they're dropping their fee for skip a payment. It really depends on your provider. But let's say you have a credit card bill and you're paying it every month, and this month you're just not able to. Well, you can request to skip a payment on that. So that means that you're not paying it this month, but you'll be paying it for one extra month than you would have previously if you were to have paid this month. So this just extends the life of the loan, but again, you will be paying on that. And with skip a payment options, most are accruing interest during this time. Again, that depends on a financial institution, but most of them will accrue interest during this time. And utilities. If it comes down to it, I want you all to know that Massachusetts has declared a state of emergency and no water, electricity, or gas can be shut off during this time due to lack of payment. Obviously, this is something that I really think is if you're just really not able to pay. And I recommend contacting your provider of these utilities and letting them know that you're not able to pay. A lot of times they will work with you to make sure that you can pay as little as you can, but making sure they keep those services on for you. It is their goal to serve you, and so I always recommend reaching out before just not paying, letting them know that this is something that you're encountering. And GreenPath Financial Wellness is a great resource for anyone in the HUECU community, including members, but also non-members, and anyone in your household. This is a free budget, credit, and COVID-19 support and counseling for you over the phone. HUECU has paid for this service so that you all don't have to. We really hope that this counseling can come to you because they do have flexible hours, as well as making sure you're able to set up appointments with them. So if you're not able to do it maybe this week, but next week would be better, you can set up an appointment for then. And they're able to give you that immediate counseling. So let's say you really don't have any idea where to start with your budget, or you've never looked through your credit report. They're a great place to call because they'll be able to help you through any of those questions that you may have. And again, that one-on-one service is extremely helpful. And please know that this is completely confidential. We do not see anything that you all talk about. They just let us know who called. And to be honest with you, for us, we just like to see that people are using this service. So please call in and use this service if you do have questions about your specific needs during this time, and they'll be happy to help you. I'm going to toss it over to Migdalia at this point, who's going to take over and talk a little bit more about refinancing.
Thank you, Sarah. So when we're looking at increasing our cash flow, there are a couple of different ways we can do that. Sarah walked us through minimizing our expenses, and another way that we can do that is to possibly increase our expenses or reduce what is going out monthly based off of our debt. So I'm going to talk about the last two, specifically refinancing our existing debt. So what this means is that what you could do is you can take the debt that you currently have with one lender and bring it over to the next lender. And you'll see in the next slide a couple more details as to why refinancing may be a good option for you. The main reason is that it's going to most often minimize your monthly bill. Truthfully, that tends to be the main reason that people will refinance. There are situations that someone may refinance just because they prefer to be with a different company and the rate may not be that much lower, but specifically during these times, the main reason that individuals are refinancing is because the rates have dropped significantly across the board. And because those interest rates have dropped, I could take my debt from company A to company B and sometimes save 2, 3, 4, even higher percentage points in my interest. One of the things to be mindful though is that when we're refinancing, because I'm bringing it from company A to company B, I'm going to lose any benefits that I had associated with company A's loan. This is really something that we see when we talk about the federal student loans. With federal student loans, any of those benefits that Sarah discussed, such as the interest rates now being 0%, income-based repayment, the opportunity to defer your loans while you're in school, all of those are federal benefits. So if you have a federal loan and bring it over to a private company, which would be anyone outside of the federal government, including not-for-profits such as us at HUECU, then you would lose those benefits. So during this time, it may not be the best option for you specifically to refinance any federal student loans. But if you have private student loans, or if someone else in your household has non-federal student loans, they may want to look at refinancing. And you'll see in the next slide a couple of additional points regarding how to determine if refinancing would make sense for your specific situation. The best starting point is to know, what are your rates? What is the balance of the loans that you carry? These are just some examples, and we have different handouts that are available. You can download them on our website. If you prefer Excel or writing it down with pen and paper, the key here is knowing exactly what is your interest rate. This is something that would have been disclosed to you when you borrowed the loan, but it's also usually available on the lender's website or your credit card statement. You may have to sometimes dig around a little bit more if you are on a mobile app. It may not be displayed, but if you cannot find it easily, I recommend trying to download the statement. The statement will tend to have much more information. Why is it important to know that interest rate? It's going to be important because it's going to be the starting point for us to determine if it makes sense or not to refinance. On the next slide, we'll talk a little bit more about the different refinancing options and how you can go from one loan to another and bring down that interest rate. There are a couple of different options that you see here. The one that I'll start with will be the student refinancing loan, because we've been talking about those previously. If you have, and I'm excluding federal loans because again, they're at 0% right now, but let's say that you have a private student loan at 11%. Most private student loans are at a lower rate currently. So I would say if you have anything over 8%, even over 7%, you may want to look to see if you can refinance those student loans. For auto loans, if you have an auto loan that is higher than 3%, I would recommend looking at refinancing. I know for us specifically at the credit union, right now we have our auto rates down to 2.99, meaning that anyone that has a rate higher would benefit from doing a refinance. As a not-for-profit, we're able to offer lower rates. So I encourage you, if you're not a member of a credit union, to still look at different credit unions to see what their rates are. And also, shop around, look at also for-profit institutions. But keep in mind that you want to look around to see what is going to be the best rate for you. Mortgages, if you have a mortgage anything over 4%, definitely would encourage you to look around and see, because you could see a decrease in your interest rate. This is something that I'll speak for us at HUECU. We're seeing a high volume of individuals refinancing their mortgages, which means that if they had a rate of 7 or 5% and now they're down to 3 point something, that is additional cash flow on a monthly basis for them. And you have a couple of different options. You can either keep your payment at the amount that it was, so you can accelerate repayment, or you can take those additional additional savings and apply it maybe towards a savings account or towards another financial goal that you have in mind. Credit cards are another very popular option to refinance, but it's not called a credit card refinance. We typically will see this as a balance transfer. So with credit card balance transfers, you will typically be given the option of taking your credit card balance with company A and bring it over to company B. The benefit of this is that if you're being charged 18-20% with company A, company B will charge you 0%, typically for a year or 18 months, depending on that company, but there is a balance transfer fee. The benefit of that balance transfer with that credit card company is that now you're going to pay less in interest, so more of your money is going towards principal every month. What I would recommend, especially with credit card balance transfers, is doing the math beforehand to see roughly what your monthly payment would need to be for you to pay off your credit card balance within that first 12 months or during that promotional period. What we sometimes will see that happens with credit card balance transfers will be that individuals will continue to use the credit card, and a year, 18 months will go by and that credit card balance hasn't gone down significantly, and therefore they're not able to fully take advantage of that 0%. In situations such as that, in which you need more time, there are debt consolidation loans, which will take the debt that you have with either credit cards, medical bills, personal loans, and they'll lend you so that you can cover that entire balance. The benefit of a debt consolidation loan or a personal loan is that you'll get more time to repay that, which means that because the repayment term is usually minimum around 5 years, it's going to give you more time. So because there's more time, your monthly payments will be a little bit lower, which means that you'll increase your monthly cash flow a lot more than if you did, let's say, a balance transfer with a credit card. On the next slide, we'll talk a little bit more about the different ways to increase our cash flow. During these times, increasing cash flow may be limited because of how employment opportunities exist. I will still mention it because working in the hospitals, you may have this may not apply. You may be able to work a little bit extra if that is an option. But one of the ways that you can increase your cash flow would be typically increasing employment, either trying to find a different job to do in addition, or seeing if your employer can provide additional hours if there's additional need. Again, I realize this may not be the option for everyone, but I did want to mention it because we know that it's not just those that are on this webinar, but also others that may be in your household that could benefit from this information. Another option during these times is increasing your cash flow by taking on a loan. So there are personal loans that if you're in a situation that perhaps you do not have sufficient savings to make you feel comfortable in the case of an emergency, you could choose to take on a personal loan. And I'm just going to use some numbers for the example. Let's say that I would ideally want to have $5,000 in my emergency fund, but currently I do not have access to those funds, and I won't be able to do a significantly save that in the next couple of weeks. I may choose to take on a personal loan for $5,000 so that I have the money in my savings account should I need it, and I will have to pay monthly. It is a loan, so I will have to pay monthly. But if I'm able to pay, let's say $120 a month, and I'm just making up the number, so that's not exactly what it would be. But if I'm able to pay $120 towards paying off that $5,000 loan, it may make sense for me to take that loan so I have that $5,000 as peace of mind. This is an option that may not work for everyone, and if you have the funds in your savings account, may be no need, but it is something that we're making folks aware of, especially if your employment has been affected in such a way that your hours may have been cut. We've had a good amount of members that have utilized a personal loan to help them supplement their income during this time when their income has decreased, but they anticipated increasing in the next couple of weeks. I do want to point out with personal loans, I know as I can speak for what we do at HUECU, we don't have prepayment penalties, meaning that if you do take on a personal loan and are able to pay it off sooner, that will save you an interest that you'll pay overall. So that is an option that I would recommend everyone to take a look before you borrow any loan, just to make sure that you have ability to pay it off sooner and not have to pay any additional fees. On the next slide, we'll talk a little bit more about some of the general resources that we have through HUECU. These are some of the ones that we've put together for COVID-19. I would recommend for you to take a look at your primary financial institution to see what they offer. As Sarah mentioned, everyone through BWH and those in your household are eligible for membership with us at HUECU. Some of the things that we've done for our members, we've reduced the personal loan rates down to 4.99. We've done skip a payment for up to 3 months. We've reduced our auto rates. Our mortgage rates are fairly low. We are providing mortgage and student loan modifications as needed. So we've been doing a lot to help our community because as a not-for-profit, we were created for our members and by our members. So we want to make sure that we're giving back and our profit is going back to our membership. This is something that we're doing, and because we're doing it, most likely other financial institutions may be doing something similar, especially if they are other credit unions. So we encourage you to go speak to your financial institution or go to their website and learn more. We also have on our blog, which is blog.huecu.org, information that's coming out 3 times a week on different topics. Things are changing very frequently right now. As much as we've done this presentation a couple of times, and every time we do it, there tends to be new information that has happened. We don't know what the next 2 to 3 months will look like. We don't know what the options will be. The federal government, as we've seen, has been able to do last minute ways to help with finances. So the stimulus check was one thing that happened, the student loans dropping at 0%. So who knows what the next couple of months will offer and what businesses may be offering as well. So we encourage you to find a source that you trust, a company that you're comfortable with, and get that information, because what may be working today may not be the best option 2 to 3 weeks from now. You do not need to be a member to subscribe to our blog. So if you're not a member, we encourage you to subscribe. Therefore, you'll get those notifications. We're going to do a quick recap as to what the next steps are. And as we're recapping, if you have any questions, please use the questions panel to let us know, and we'll be glad to take them. We'll also have our contact information, so if there is a question that comes to mind at a later point, know that you can reach out to us. When it comes to increasing your cash flow, the first step is knowing where are you? Where are we starting with? What is my current cash flow? And then setting a goal. Why am I increasing this cash flow? Am I trying to increase my cash flow to put money aside towards savings? Am I trying to increase my cash flow so that I can pay off my debt? Having that goal is going to be important, because then once you do have that cash flow, you've already determined where it's going, versus increasing the cash flow, not having a plan for it, and then not seeing the true benefit of that additional cash flow. As always, you want to compare your options. You want to look around, see what other institutions are doing, what's your financial institution doing. Encourage you to always look at what we're doing at HUECU and see what for-profits are doing as well. And then the next step is deciding, okay, am I going to take an action and refinance? Am I going to do my budget? What are exactly are going to be your specific next steps? And as always, reevaluate, because things are changing. And even though you may be in a situation now that some of these options may make sense for you or may not, in a couple of weeks, a couple of months, it may look a little bit different. Thank you so much for joining today's webinar. We're going to continue to be here available for you should you have any questions. And you can also follow us on our social media channels to stay up to date with additional presentations that we will be giving and blog articles that we'll have out.